Selamat sejahtera kepada doktor. My name is Charlie Gunasegaran. My group number is group 14 and my group members are Nitya, Aina, Anis Maisara and Dalila. For our group assignment, we were assigned to review a company's past and current financial performance, evaluate its financial health, and make basic financial projection to help plan for the upcoming year. The company we have selected is WCT Holdings Berhad. Let me give a short overview of this company. WCT Berhad is a leading Malaysian construction and property development group established in 1981 and listed in main market of Bursa Malaysia in 1999. WCT has grown into a major player with three core business, which is engineering and construction, property development, and property investment and management. WCT has also delivered major national projects including Formula One circuit, LRT, MRT, airports, highways, dams, iconic commercial buildings, and many more. WCT also holds a strong land bank of 189 acres and has received Green RE certifications for its commitment to sustainable development. For the next part, financial performance. To measure the financial performance of this company, we will be using four methods. The first method is firm liquidity. Firm liquidity is a metric that measures a company's ability to pay off its short-term liability using the short-term asset. So I will explain about current ratio. Current ratio can be found by dividing current asset and current liability. So since we are using 2 years, which is 2023 and 2024, we have to take the value from the financial report and divide according to the year. And for 2023, we will getting 1.26, 2024 is 0.99. So by comparing both of these values, we can finalize that the company's liquidity position slightly declined from 1.26 to 0.99 and at 2024, indicating the company's ability to cover the short-term obligation with its current asset weakened little, although it still maintains a strong liquidity position overall. So that's all from me.
So the second method is operating profitability. In operating profitability, we have 6 ratios, which is operating return on asset, operating profit margin, total asset turnover, account receivable turnover, inventory turnover, and fixed asset turnover. So for operating return on asset, all the values should be taken from the financial report. So for the year 2023, we should count based on the formula, which is operating income divide total asset. So for the year 2023, we get negative 0.90%. For the year 2024, we get 5.23%. So the overall analysis shows that the operating return on asset increased from 0.90% in 2023 to 5.23% in 2024, showing a significant improvement in operating efficiency. This shows that in the year 2024, the company managed its asset more effectively to generate higher operating profit compared to previous year. And these are the calculations. So for the third method, we have financing decision. We have 2 ratios, which is debt ratio and times interest and ratio. For the debt ratio, the formulas are total debt divide total asset. So for the year 2023, we got 35.69%. And for the year 2024, we got 49%. So the overall analysis shows that WCT Berhad Holdings on the year 2023 finances 35.69% of its asset by debt and 64.31% by equity, compare lower on the year 2024, financing 49% of its asset by debt.
Tally from 6.14% in 2023 to 8.31% in 2024, delivering a higher return to owners, a trend supported by better operating profitability, where key metrics like operating returns on asset and operating profit margin move from worse position in 2023 to better position in 2024. In terms of the firm's illiquidity, the company showed improved short-term efficiency by significantly reducing the time it takes to collect receivables and sell inventory in 2024. Yet, the presentation highlights a major risk as both the current ratio and asset test ratio remain visually very low, indicating no immediate debt-paying ability. Financing decision revealed that this performance coincided with a dramatic increase in leverage, with the debt ratio rising sharply from approximately 40 in 2023 to around sitting in 2024, signifying a much greater.
So now I'm going to talk about success, failures, and risks. As you can see from the slide, the company's performance in 2024 improved a lot better than 2023, especially in profitability and efficiency. This happened because they control costs better, manage their operations more efficiently, and move the inventory and receivable faster. These are the main success factors that help the company perform better. Then, as you can see on the next point, there are also risks. The biggest one is liquidity. The current ratio dropped below 1, which means the company might struggle to pay short-term obligations. You can also see here that the debt ratio increased, showing that the company is relying more on borrowed money. Even though the profit looks good this year, but the performance might not be sustainable if it was driven by temporary projects. So overall, as shown on the last point, the company is doing well operationally, but they still need to improve liquidity, manage their debt properly, and make sure their performance is stable for the long term. And of course, from my own point of view, I think WCT Berhad can do better in the future.
Now, I will go through WCT Holdings Berhad performance and see if the company is a good investment choice. So, WCT Berhad shows a big improvement from 2003 to 2004. The company has become more profitable, turning a loss into a strong operating profit. Its efficiency also improved because inventory moved faster, customer pay quicker, and assets are used more effectively. The company is also in a better position to handle its debt, as shown by the higher times interest earn ratio. But there's still a concern with liquidity. The current and assets ratio dropped, which means the company may face short-term cash flow pressure. Overall, WCT Berhad looks like a good investment because of its strong recovery and better performance, but investors should keep an eye on the liquidity. Lastly, based on the company's performance, we can also look at its future outlook and what the company should focus on. From the ratio, WCT Holdings Berhad is expected to improve moderately. The ratio indicates strong profit and better operational efficiency. Even though liquidity in 2024 is slightly weak, this is partly balanced by faster receivable collection. We can also see that the company is using its inventory and fixed assets more efficiently, and profit has improved, showing that projects are performing better and costs are being controlled. To support a more stable future, we recommend the company focus on improving cash flow, for example, by offering early payment discount, enforcing credit terms, and refinancing expensive borrowings. Managing debt wisely will also help reduce financial risk during unexpected market change. In addition, WCT property development and investment segment have contributed a lot to its profit in 2024, so continue to launch well-priced projects in high-demand area, especially those that are sustainable or energy efficient, can help strengthen their position in the long term. So, in conclusion, WCT Holding Berhad has strong potential for better future performance, and with the right strategy, the company can continue to grow and achieve long-term financial success. With that, we conclude our presentation. That's all from our group. Thank you.
Thanks for watching. Please subscribe.